Imagine this. You're in a packed stadium with 80,000 screaming fans, thinking you're just one in a massive crowd. Then someone leans in and whispers, "Everyone here combined doesn't even hold as much XRP as you do." That would change everything, right? Most XRP holders have no clue they're already at that level. They scroll past whale wallets with millions of tokens, feel small, and underestimate how truly early they are. But today, I'm pulling back the curtain on the real December 2025 XRP rich list. And by the end, you'll never doubt your bag again. I get messages every single day from people stressing over their holdings. "I only have a few thousand XRP. Am I too late?" They ask the truth. They're not just early. They're way ahead of almost everyone on the planet. Whales dominate the headlines, but those massive wallets are mostly exchanges holding customer funds, institutions managing liquidity, custodians, market makers, and automated systems. Not everyday individual investors like you. When we filter out that noise and look at real human holders, the picture flips completely. You're not chasing the pack, you're leading it. If you're serious about locking in your edge and accessing the private alerts, millionaire mindset training, and proven strategies that top holders use to build real wealth quietly, join XRP Insider's Elite today. It's the ultimate upgrade for staying ahead in this shift. It's all in the video description. Right now, in December 2025, there are over 7.3 million XRP wallets worldwide. That's a big number, and it sounds like widespread adoption. But dig deeper, and it's wildly misleading. Most of those are empty or dust wallets with tiny amounts. In fact, only about 740,000 wallets hold 2,300 XRP or more. That means 90% of all wallets over 6.5 million are barely holding anything meaningful. The magic number to crack the top 10% this month, just 2,214 XRP. If you're sitting on that or more, congratulations. You're already ahead of millions of wallets globally. Think about those messages I get. People with 2,000 or 3,000 XRP panic, comparing themselves to anonymous mega wallets and feeling behind. But they're not. They're in an elite group while the rest of the world is still on the sidelines watching from afar. This ecosystem is still so young, and most holders don't realize the stadium analogy applies to them right now. As we climb higher on the rich list, the numbers get even more eye-opening. To hit the top 5%, you need around 8,000 XRP. That's it. With 8,000 XRP, you're outperforming 95% of all wallets out there. Sure, buying that much wasn't cheap anymore compared to years ago, but consistent dollar cost averaging and patience got many there, and it still can for anyone starting today. Steady accumulation beats chasing pumps every time. People fixate on the giants, forgetting how skewed the distribution really is. Now here's where it starts getting truly powerful. The top 4% includes roughly 300,000 wallets holding at least 10,000 XRP. But strip away the non-human ones, exchanges, OTC desks, bots, institutional custodians, and that number plummets. Realistically, only about 100,000 actual humans on Earth hold 10,000 XRP or more. And that's probably overstated because serious holders use multiple wallets for security and privacy. I know people with 20 or 30 addresses splitting their bags. Factor that in, and the true count of individual humans at this level could be even lower, maybe tens of thousands. On a planet of 8 billion people, that group wouldn't even fill a large football stadium. Yet they're holding meaningful positions in what could become a cornerstone of global finance. Most XRP holders think 10,000 is small because they've seen screenshots of million token wallets, but those aren't people. They're operational addresses for big entities. You don't need to match them to be early. You're already in one of the most exclusive clubs in crypto, pushing into the top 1%. The threshold sits around 49,000 XRP. Impressive, yes. But again, most of those wallets belong to entities with obligations, not single investors dreaming of financial freedom. The number of real humans up there is tiny, almost negligible. This distribution explains why so many feel small, despite being incredibly positioned. The biggest whales aren't your competition, they're infrastructure players. Your real advantage is time, self-custody, and holding through the quiet buildup. That's where the real mindset shift happens for most holders. Seeing those numbers laid out changes how you view your own position. You start realizing that the people panicking over only having a few thousand XRP are actually in a far stronger spot than they think. The biggest risk isn't having a small bag, It's giving up too soon because of wrong comparisons. Every cycle in crypto shows the same pattern. Early Bitcoin holders who had 100 or 500 BTC thought they were tiny compared to the miners with thousands. Early Ethereum buyers with 1,000 ETH felt behind when whales were dumping during dips. But time rewarded the ones who ignored the noise and just held. The same is playing out with XRP right now. The whales you see aren't your peers. They're mostly operational wallets running the system. This is why self-custody matters more than bag size. History is full of stories of people who were perfectly positioned but lost everything because their coins were on an exchange that collapsed. FTX, Matt Gauss, Celsius, the list goes on. Every time the people who moved to cold storage walked away fine, while others who were early got reset to zero. If you're holding XRP, moving it off exchanges isn't optional if you want to stay in the game long term. Cold wallets give you true control. No counterparty risk, no sudden freezes, no forced liquidations during volatility. It's the difference between owning an asset and just having an IOU. And as XRP evolves, self-custody becomes even more critical. We're already seeing shifts toward tokenization of real-world assets, where massive value will flow through fast settlement layers. Banks, asset managers, and payment providers are quietly building infrastructure that needs reliable liquidity. XRP was built for exactly that, bridging value instantly across borders without pre-funding accounts in every currency. When tokenization scales, the demand won't come from retail speculation. It will come from necessity. Institutions will need XRP to settle tokenized stocks, bonds, real estate, commodities, everything. That kind of utility creates structural demand, not hype-driven pumps. But here's the key most miss. Once that phase hits, retail access tightens. Exchanges will face stricter rules. Liquidity will move into private pools and institutional custodians. Operational holdings will lock up supply for good. We've seen it before with other assets that became systemically important. Early public access shrinks as the system matures. Think about how gold works today. Most of it sits in central bank vaults or institutional reserves, not circulating freely. Premium internet domain names from the nines are now controlled by corporations. The early holders who didn't sell became the beneficiaries. XRP is heading down a similar path, not as a meme asset, but as infrastructure. That's why patience is the real edge. The people who sell at the first big move because it's life-changing money often regret it later. They forget why they got in, not for quick flips, but for positioning in a major financial shift. Human psychology makes us terrible at exponential growth. We feel urgency when prices rise fast, but the quiet building phase is where the real opportunity sits. Comparison is another trap. You see a wallet with millions and feel small without realizing it's probably an exchange holding funds for thousands of users, or an OTC desk providing liquidity, or a custodian for institutional clients. When you filter those out, the number of actual individuals with serious bags drops sharply. Your 5,000 or 10,000 XRP suddenly looks very different, and multiple wallets add another layer. Most long-term holders split their holdings across several addresses for security, privacy, and risk management. One person can easily control 10 or 20 wallets. That means the true count of real humans at higher tiers is much lower than the raw address numbers suggest. The exclusive group you're in is even smaller than it appears. This distribution is what makes XRP unique. It's not like meme coins where a few insiders hold everything and retail chases pumps. The large wallets are mostly functional, supporting the network rather than speculating. That creates stability during the build phase and explosive potential when utility demand kicks in. Early adopters in any transformative technology go through the same emotional roller coaster. They buy in with conviction, then watch sideways action for years and question everything. Amazon stock traded flat for long stretches while building warehouses and infrastructure. Early holders felt bored and frustrated, but the ones who understood the long game stayed, and the structure eventually delivered. XRP is in that exact infrastructure phase now. Partnerships are forming quietly. Pilots for tokenized assets are expanding. Regulatory frameworks are aligning for cross-border digital value transfer. None of it makes headlines daily, but it's happening steadily behind the scenes. Retail investors judge it like a speculative asset, expecting constant excitement. When price moves slowly, they assume something's wrong. But foundational assets don't behave that way. They look boring until the tipping point. Then adoption accelerates rapidly because the alternative becomes too slow and expensive. The old rails, Swift correspondent banking, can't handle the volume and speed needed for tokenized finance at scale. XRP can. That's not hype, it's engineering reality. Low fees, fast finality, proven scalability. When institutions need to move trillions in tokenized value daily, efficiency wins. Early holders who recognize this don't need daily price spikes for validation. They see the structure forming. They protect their position with cold storage. They add consistently when others panic. And they avoid the emotional traps that shake out weak hands in every cycle. The rich list isn't about making you feel small, it's about showing how few people are truly positioned. A stadium full of serious individual holders on a planet of billions. That's rarity, that's opportunity. The window to accumulate meaningful amounts at current levels won't stay open indefinitely. As demand grows from real usage, supply available on open markets compresses. Institutions don't sell operational liquidity, they hold it. That scarcity drives value independently of retail sentiment. The people who stay patient through the quiet years end up controlling access to a critical financial rail. Understanding where you stand removes the doubt. You stop comparing to non-human wallets. You stop worrying about short-term price action. You focus on what matters, securing your keys, thinking decades ahead, and letting the system mature around your position. This isn't about getting rich quick. It's about recognizing a rare alignment, being early in an asset designed for global infrastructure, while most of the world still doesn't understand what's building. The regret stories always come from those who sold too soon, not those who held too long. The next phase won't look like past cryptomania. It will be driven by necessity, not speculation. Banks and enterprises integrating because they have to, not because they want to gamble. That shift changes everything for supply dynamics and long-term valuation. If you're holding today, you're already ahead of the curve. The question is whether you'll protect that advantage and stay the course when emotion tests you. History shows the winners are the ones who do. This is not financial advice. That's the power of zooming out and seeing the real landscape. The rich list isn't there to intimidate. It's proof of how small the group of positioned holders truly is. A few tens of thousands of real people, maybe less, controlling meaningful stakes in an asset built for global settlement. Everyone else is still figuring it out or sitting on the sidelines. When tokenization fully ramps up, trillions in real-world value will need instant, compliant bridges. Stocks, bonds, funds, property titles, all digitized and moving across borders. Traditional systems choke on that scale. Slow, expensive, fragmented. XRP fixes it with sub-second finality and pennies and fees. Institutions aren't waiting for permission. They're already testing, partnering, and reserving liquidity. That's where supply dynamics shift hard. Operational needs mean locking up XRP long-term. Market makers, payment providers, custodians, they hold, not flip. As that demand grows, open market availability shrinks. Early individual holders become the scarce counterparties, not because of hype, but pure structural necessity. History repeats this every time infrastructure matures. Early internet pioneers held key domains while most dismissed them. Bitcoin holders from 2010 sat quiet as institutions later paid premiums for access. The pattern is always the same: quiet accumulation phase, then sudden realization, then compressed liquidity. XRP sits squarely in that quiet phase today. Price might feel stagnant to some, but the integrations aren't. Banks expanding digital asset desks, governments updating cross-border rules, token standards aligning all without fanfare because real systems build in silence until they're indispensable. The people who panic sell during this boredom miss the point. They treat it like a short-term trade instead of infrastructure positioning. Emotion overrides data. They see a double or triple and cash out. Forgetting the rich list shows how few are truly in the game. By the time headlines scream adoption, the easy accumulation window is closed. Regret hits hardest when you realize you were early, but didn't stay early. The guy who sold Bitcoin at $100, the one who dumped Ethereum at $50, they all had the same thoughts. This is enough. It's not moving fast. Meanwhile, patient holders watch the world catch up. Your edge right now is simple. Understand the distribution. Secure your keys. Add when others doubt and ignore short-term noise. No need for millions in XRP to benefit massively. Even mid-tier bags today could control serious liquidity power tomorrow. This isn't speculation. It's observing how essential rails evolve. Retail gets the front row seat early on, then institutions take over operations, the bridge between those eras, the holders who didn't quit. The stadium is still mostly empty from a global view. Billions haven't entered yet, but when they do through tokenized everything, they'll need the asset a tiny group already controls. That's when holding feels different, not luck. Positioning. If you're serious about maximizing this once in a cycle opportunity with exclusive private alerts, in-depth research, millionaire mindset frameworks, and the exact tools top holders use to build lasting wealth without noise, join XRP Insiders Elite. It's the smartest move to stay ahead before the world wakes up.